Hello everyone, welcome to the market update. My name is Kay Kim with the Traders Club. Today is September 28th, 2016. Actually, as I publish or record this video, market is actually still up or still open. So we would have another hour going here. So you will see the flashing lights on your left. Don't worry about it. Just means the market is open. But tonight, what we're going to do is we're going to look at S&P 500 index here. But we're going to be looking. We're going to be going back and forth with Spider and S&P 500 index itself because we have a slightly different sentiment between these two here. Just slightly, not that much. So we'll just kind of look at them both here tonight. If we do have time, we'll look at some other indices like NASDAQ and things. But as I post this, as I record this video, S&P 500 is about up 0.42%. Other indices are pretty much all up as well today. It looks like oil is up a lot today, about 5.37%. Treasury bonds down. We'll also talk about Twitter, Apple, and Tesla, and we'll wrap up the video with those ticker names. But first, let's talk S&P 500 index here. Again, market is still up. We still have a 1 hour to go here as I record the video. So as I look at the S&P 500 index, as of today, as of right now, the price is staying above these 10 and 20 day moving averages. They are in exponential moving average. Something that we talked about a lot about was that 50-day moving average. This is exponential moving average. As you can see how, the 50-day has been acting as resistance for quite some time here. You can see kind of hovering below the price, hovering below that level. This was just last week or so. And then once we gotten above that, we fall back. And to be fair, on my last video, I thought that we may see some kind of bounce on the 10 and 20 EMA, but instead we gapped down. We actually blew right through the 10 and 20 EMA, and we got to the 50 EMA. This is a reason why you want to look at these moving averages, because sometimes one level fails to hold, then there will be another level that will come and hold. This is a reason why when you're dealing with this kind of intermediate term bullish market, you will see that 10 and 20 we blew right through that below, and then we also blew right through the 50 MA. And then what was the next level to watch once we blew through those moving averages? It was the 100 simple moving averages here. So that's kind of how you look at this market, and you can have to gauge this market correctly. This is why moving average is very, very important, and is a great tool in technical trading. So basically once we found support in this 100 SMA level, we got up here. What was the next level once we found support at that 100 SMA? It was the 50 MA. This was the next in line to possibly become resistance. And that's exactly what it did. It was that 50 MA we started finding resistance there. We really held below that or all around it. Kind of looked like a bull flagging pattern here. We broke out of that bull flagging pattern. We blew right through these 10 and 20 EMA to the upside. Instead of seeing, we didn't see any resistance there on the S&P 500 index. And then we gapped up. And do you remember what we've been talking about this whole time? It was that resistance level. This level right here. This is what we call gap fill resistance. We've been talking about this if you've been following me on my Twitter or on my blog. We've been talking about this is an important level of resistance. This is a gap. Once the gap gets filled, it acts as instant resistance level. And that's precisely what it did here. You see that we went up to that level, filled this gap, and that level acted as resistance. And that's the level that we had also this downtrend resistance. The reason why I say that Spider and S&P 500 index have a slightly different sentiment, because Spider, this is a gap fill resistance right here at 218.50-ish. to 1850 is a gap fill resistance, and we actually did not completely fill that gap yet on this day, on September 22nd. While the S&P 500 index, SPX, has filled that gap. So I think, you know, we kind of have to watch both. I think, you know, with the, you know, dividends that was paid on the Spider, I think that's why we have a lower price here, or a little bit different sentiment there. So I think to be more accurate in your technical trading and technical sentiment on the S&P 500 index, I think it will be important to analyze S&P 500 index, SPX, versus Spider for that reason. So that, you know, that gap was filled, then act as instant resistance there, and then obviously market pulled back, and we blew right through that 10 and 20 MA. But what was the next in line? It was that 50-day moving average. This is exponential moving average, just right on the cue. You see that 50 MA coming down. You know, you can see that it has been flattening out. It was rising, but it started flattening out, and then we are starting to kind of, you know, that level is acting as a strong pivot, meaning it was a resistance in the past, now becoming a support. That's old resistance becoming a new support. That's classic technical analysis there. And then today, we saw some volatility, but we are staying above 1020 EMA, and that's a good sign there. So it looks like, you know, we're going to continue to get back up to 2177 level on the S&P 500 index. That is the downtrend resistance, which is coinciding with this gap fill resistance, and this is going to be the important level. Once we break out above this level, I believe we'll see much stronger move to the upside. The rally will continue, and that will be for another video. And some of the targets I might reveal once we see that getting above that level. But let's say if this thing starts to shake and bake here in this vicinity, we start throwing up some shooting stars and dojis and, you know, bears engulfing pattern, all kinds of shenanigans can happen here. Then they start falling back. Then what you want to watch is, again, that 10 and 20 MA. If that level does not hold, then you watch that 50 MA. I think 50 MA likely become a strong resist or support level, where if this thing comes down again, blowing right through the 10, if it blows right through the 10-20 MA, then you will see that 50, and then, you know, in that process, you probably see, because we did kind of establish this longer term uptrend support on the S&P 500 index. Do you see this? That's a strong bullish uptrend support here, here, and here. So if this thing kind of fizzles around, come back, that's probably the level act as strong support there, and that's the level where we'll be coinciding with 50 MA. If we break below that level, we'll talk about it. If that happens, that will be for another video. But for now, the sentiment of the market as of today in the minor term is bullish. Also in the intermediate term is bullish. However, that sentiment in the minor term can shift quickly if we find a struggle or resistance in that vicinity. But as long as it stays 10 and 20 MA here and 50 MA, and, you know, maybe pull back, if this thing pulls back and then kind of, you know, hit that 10-20 MA in that vicinity, and if it does that, then we'll continue to provide and cultivate and establish this minor term higher lows. What does that mean? That means minor term uptrend is establishing. And then once we break out of this 2177, then that would be a cultivation of minor term uptrend there. And at that point, the market will continue higher. So everything looks great as of today. Except the fact that, you know, we have resistance coming up shortly here. We got 2 more days of trading. So we'll see what happens tomorrow and Friday. Again, this falling resistance and the horizontal resistance at 2177 vicinity. This is a level to watch tomorrow and Friday. Again, Spider, A little bit different sentiment. You see how we got this resistance there, and then that. So it's just you were just kind of hitting the resistance today, and then you got a little bit of that here. So so a little bit different sentiments. So again, though, I think we do need to do our analysis looking at S&P 500 index, SPX versus Spider. But I think, above this level, 217.19, above this level, I think there's a good chance that it will continue higher. However, we do have a gap fill resistance at 218.42 or so. So that's the level to watch should the price continues higher. All right, so let's see. Do we have time? 10 minutes gone by. We'll look at Qs, see how the Qs look like here. Let me get rid of some of these. Qs obviously bullish. I mean, this is a completely different sentiment. This is a completely different sentiment than S&P 500 index. This thing looks very, very bullish. Ever since it has broken out of this resistance level right here, and it has been in this almost, we had that almost parabolic move. We pulled, again, this is what I was talking about, that 10 and 20, we lost 10 and 20, but then 50 MA was there to find support. This is why these moving averages are important. See, this is much bullish sentiment here on the NASDAQ, on the Qs, because the fact that we never retested 100 SMA. Remember what I talked about on the S&P 500 index? S&P, we actually tested 100 SMA, 100 simple moving average there. On the Qs and on the NASDAQ here, we actually never did retest the 100 SMA, 100 simple moving average. So looking at the NASDAQ Composite Index itself, it looks like, let's see here. It looks like we have established this intermediate term uptrend support there. We found support at 50 MA, and as of today, we found support at 20. You see how perfectly it respected that 20 MA. This is kind of what I'm saying. This thing goes up, comes down, hit the 10 EMA here. This was back in, September 16, 2019, and then it bounced a couple times, and then there's one final bounce on the 10-day moving edge, and got up here. And then we pull back, and that's what market does. Every time when we see a pullback, there's a crazy people coming out and continue to push their crash agenda, and that's what market does. It goes up and down, and in that process, we cultivate higher lows and higher highs, right? So we pull back, and we got below the 10 EMA. You see right there, slightly below. And then when was the next thing in line? It was a 20 exponential moving average, 20 EMA, and that's where we found support yesterday. And today, we're continuing to move to the upside. I mean, NASDAQ Composite, very bullish sentiment here in the minor term, intermediate term, primary term, well cultivated higher lows and higher highs. I mean, look at this move right here. And if you don't want to call that an uptrend, you want to call this like it looks like the whole thing is going to crash, then you really don't know how the market sentiment works. Okay? I'll give you, if you want to call a crash back here when we have lower highs and lower lows, I say, hey, that's a concerning signals. That's a warning signals. We really, if the bears gonna really tank this thing, we wanna, if bears wanna cultivate a downtrend, maybe this is where they're gonna start and continue to create lower lows and lower highs. And we did have these lower highs here. And that was concerning situation. These were technical signals that giving us a warning signal, but we never did have full-on reversal confirmation. And I don't have time to explain what that means. There are other videos on my YouTube and blog if you want to go check that out. But ever since then, we have been cultivating this higher lows and higher highs, and we're in a healthy uptrend. Healthy uptrend. Again, it's gonna have its minor term ups and downs. That's how the market moves. And so as long as you understand the intermediate term movement, minor term movement, primary term movement, then you can able to gauge this market looking at your pivotal levels and the moving averages. right? So, NASDAQ and the Qs looks very bullish here. As long as it stays above 10 and 20 MA, the minor term sentiment is bullish. As long as it stays above a 50 MA and even 100 SMA, the intermediate term sentiment is bullish. It will continue higher, it will pull back. If we lose 10 and 20, the next thing to watch is 50. So you see, this is how you can gauge the market and manage your trades in this way. Quickly here, let's go to Twitter, and we'll talk about Twitter here. Twitter, obviously, on my last video on YouTube or blog, we talked about here, should you buy Twitter in this market update that I've done. We talked about is this the level for an investors? Is this level to buy for long-term trader? People who want, I'm not talking about just couple weeks and couple months. I'm talking about somebody who wants to finally, buy it, maybe hold for several years, up to 5 to 10 years. It's not the level for investors. This still is the level for traders, short-term traders. So we talked about how 26.35 and even possibly some of this level here, 25, 26 vicinity could act as resistance, and that's, if this thing continues on higher, then we have this falling downtrend resistance coming down. So this vicinity right here is a level to watch, and I think as long as we're below that level, there's still bearish connotation in the primary term. Obviously, we are seeing some intermediate term development of bullishness, but again, big picture in a major primary term, we're still in a downtrend. So you have to be careful about that if you guys are thinking long term. But if you're thinking just I want to profit from this pop, then that's a good time. The best time would have been that right at the gap here, and then kind of continue to hold to some of those levels and see how it deals with that vicinity. So again, still there's a cautionary signals in a big picture, but just a short term looks bullish. We're above all the 10, 20 MA, all these moving averages. You see long term moving averages haven't crossed back up yet. So you want to see maybe these moving averages seeing golden cross, and maybe they'll give us a little bit more edge for, see if this Twitter can finally bottom here. Again, on my last video, on this video, I talked about what it means, what it will look like to see a major bottoming reversal pattern, so you can check that out. But right now, looking at more of a minor term perspective, it looks like Twitter is doing well here. We did find some, this is a 65-minute chart. We did find some overbought status on these oscillators on the 65-minute chart here. So this is the reason why we seen pullback today. And currently though, we're looking at the old resistance, new support kind of playing out here. And so that's kind of what we're seeing in the minor term. That's why, again, you see that little pullback here. Almost looks like on the daily, looks like a bull flag here. Sometimes these bull flags can last longer, maybe 3 days or so, kind of catching up play where 10 EMA will wait for 10 EMA and it will come down and hit the 10 EMA before going higher. So looks like possible bull flag. 10 EMA on the daily chart though, looks like we possibly have that RSI is at an overbought status. But stochastic looks like it has much more room to move here. So a little bit of mixed signal on the daily. Maybe there might be some slowdown here before going higher. But as of today, the sentiment is bullish there. Let's go to Apple. Apple, let me just update this chart real quick here. I'll make that there. We do have this falling channel. There. So I mean, if you let's see, if you've been following my blog on my Twitter and StockTwits, I've been updating my chart here. I just want to talk about it real quick. So since September 6th, I went in with calls here at 107.66, and then I've been updating it, and usually I update it on a weekly basis. So this is the last update yesterday. We talked about this falling channel here, bull flag pattern. This is falling channel / bull flag. You can see it goes up and then it falls back. You see the volume starts decline. So there aren't a lot of sellers But there are some short-term sellers here, and some people shorter-term traders are taking profit. So that's kind of what we're seeing here. 212-ish support is a level that we've been talking about. We talked about on that update yesterday. There's a bullish counter attack candle, meaning this was a close, this was open. So it opens lower, it gaps down, and it closes at the level of previous day's close. So that's a counterattack, right? It gapped down, and so you see how Japanese candle analysis, they use these kind of creative names as a counterattack. So it looks like it was going to be bearish, but then it counterattacked throughout the day, and towards the end of the day, it got back up to previous day's close. And then obviously yesterday, we saw a little bit of slight follow through, and then we talked about how that's the what is it right here? 114.68 level is the resistance level, is the level, pivotal level that we need to watch. 114.68. So that's the level right here. So this is precisely where we gap up to today, about 114.60-ish level today. And then we have a little bit of gap here, which is still open. So that's a good sign here, but we're still kind of dangling around in that falling channel resistance. If before this thing takes off to the upside, let me actually, and this was a gap resistance, you see that gap? So here, I'm gonna move this pivot right here. So right there, 114.69, that's the level we got up to, and seeing some sellers, short-term sellers there. And so I think once it gets up above 114.69 and stays above 114.69, maybe if we see something like that tomorrow, and if it stays above it, maybe retest it, and then it continues higher, staying above 115.71, I think there's a good chance it will continue on. The next target would have been 117.40, and then 120.180. We do have another gap that is still open right here. That's what I would call gap fill resistance. It's the same level as this area. You see that gap? See this gap right there? Gap fill resistance, we pull back. If this thing continues on higher, there's another gap fill resistance, 120.59, which I think that that's gonna be also gonna be acting as a pretty strong resistance. Doesn't mean the whole thing's gonna crash down. It just means if it continues higher, you will find resistance there, and then it will start to fall back before going higher again. Again, I believe that the Apple has fully reversed. In a big picture, it's gonna have its ups and downs. There is an article that I wrote on it. Let's see. There is where was it? Right here. So this was back in July 26th. 3 reasons why Apple has bottomed. If you go through this article, you will see why I believe that the Apple is ready to gap back up, and subsequently that it could even get up to and make even new all-time high. For now though, that will be for another video. But for now, let's look at these important levels to watch here. Again, current levels at 114.69. If we're gonna have to break out to the upside, 117 and 120 level to watch there as potential level of resistance. And then again, as of today, the minor term perspective is bullish. You can see that 10-day moving average just rising higher. 20-day, we are not even near 50 MA. Very bullish sentiment. We have a good cultivation of higher lows and higher highs in the intermediate term. We're dealing with uptrend here, intermediate term uptrend and minor term uptrend. And so we'll continue to look at this stock as a bullish stock as long as in the minor term, as long as it stays about 10 and 20 moving averages, as you're seeing there, continue to rise to the upside. Again, 114.69 level to watch tomorrow and Friday. If we can stay clear above the level and stay above it next week, early next week, there's a good chance this thing is going to about 120. So we'll continue to, and I'm still holding full position on this. I have not closed out or scalped or anything like that since I got in back in at 107-ish there. Let's look at Tesla, and I'll end the video with this. Tesla, obviously, we've seen a lot of shenanigan here. This market is still in this range-bound area. You can see right there. So what's happening right now is looking at things more of a minor to intermediate term. We are bound by this downtrend resistance in the intermediate term. Let me readjust this real quick, and again, there. And we found support in a bit of odd level. It didn't come all the way down to 190.26, which was the the swing low here from the June 29, but we kind of stopped short here at 194 and decided that that was a level that it wants to find some support. And so right now, 24.69 is current support in the minor term. So you can see we are 10 and 20 is starting to flattening out, meaning kind of a minor term sentiment is starting to become neutral here. Obviously with the declining 50 MA, which has been acting as resistance last several days. This is a reason why moving averages are important. You see here, last 3 days, we were not able to get above the moving average. We're that level. There's a lot of short-term sellers there, but we're holding above 10 EMA. So we're sandwiched between 50 EMA, 10 EMA, and we're just kind of seeing how it's gonna play out above 24, 25-ish level. I think if this thing breaks above 50 EMA here, 50-day exponential moving average, then next level support to watch will be this falling downtrend resistance, which is coinciding with the 100 and 200 SMA, right? And if we continue to see sellers there, then I think the next level it might kind of get stuck here for a little bit, and you will see a resolution either to the upside or downside. But if this thing actually breaks out to the upside, then I could see that this thing going to about 227, ultimately 235, anywhere above 235. This thing would get back up to 250 for 266. Though I do think there's another downtrend resistance coming here right there. So once above 235, then I think that downtrend resistance to watch. But that's for next video. But for now, I think level to watch for this week is again 205 and the 50 MA at 209. If this thing breaks above it, I think there's a good chance we'll get to about 214, 215, 216-ish level. If he breaks below the support though, 50 MA, this could come back down to possibly 194. But if I do a little Fibonacci here in the minor term, it could some of these levels could act as some kind of support, this Fibonacci retracement zone. So that's the level to watch there in the minor term on Tesla. Again, the best way to reach me, the best way to connect with me would be find this thing there on my blog at twotradersclub.com, and you can always again, there's never spam. You can put your email address there. And as soon as I write on any article or videos like this one, you will get that notification on your email inbox, so you'll never miss any of my analysis there. Have a great night. Enjoy your Wednesday night. And we'll see how the market plays out this week, and we'll go from there. Talk to you guys later.